Good evening to you guys. From the last lecture I sent, I could remember promising I'll send the full lecture. So today, I'll show you the things left out, which also I will include the ones I sent the last time, like a full lecture on how to use this indicator, Ichimoku crowd. From what I explained, the first thing I do when I get when I apply this Ichimoku crowd in my strategy in trading is to bring daily time frame or to set my chart screen to daily time frame, from where I will determine the direction of the market looking at the trend. If the market or these candlesticks you see here, the green and red candles you see here, if they are above the trend like you see in this chart screen I have here, then you know that we are in a bullish trend. If they are below the market, can you see they are in bullish trend? If they are below the market and they are moving below the crowd, that means it's a bearish trend. Can you see that? Can you see this crowd? The crowd is a bearish one. And don't you see the market, the candlesticks are below it? Here they were bearish, but here they are bullish. The candlesticks are above it, and don't you see this is a bullish trend from what I explained. So having understood the direction of the trend, there is no need wasting time. Secondly, we go and find the support, areas of support and resistance. What are the areas of support and resistance? You can actually look at it and be able to determine. But the best way to determine the areas of support and resistance is with the use of Fibonacci retracement. It's an indicator. So most of the time, in fact, you guys have not been able to teach you guys the use of this indicator because I'm teaching the indicators we have in our phone app, in this MT5 MT4 phone app. So now I will prepare a lecture specially for the use of Fibonacci retracement in trading view. You cannot use it with this our MT5, it's not there, but you can use it in trading view. So I will teach I'll get a lecture across on it. So in this particular one, just know that next is to find your areas of support and resistance, and you mark it out. Yes. From what you see in this my chart screen now, let me remove some of these lines we have here. From what you see in this our chart screen now, this one, don't you see, is an area of resistance here. All the same, let me not just dwell much on this particular resistance and support till I prepare the lecture. So you see how to use the Fibonacci retracement to mark out these areas. Once you've marked out the areas in this daily time frame, you quickly switch over to your 1 hour time frame. What are the things that can be done in 1 hour time frame? 1 hour time frame, I use my RSI indicator. Yes, I use my RSI indicator, and I as well from the support and resistance I have marked out. If it is, let's say, at support, that means if it's at support, that means maybe the market has been going down and it has come to a stage where I am expecting that the market will now reverse and start moving up. So, and from my marking, it is on a support. That means support. That means we should just like when this BTC you see here was going down and it came to this stage. Don't you see, if you use Fibonacci retracement, you see that there is a support level somewhere around here. Here we are seeing my red line. And as well, you look at the RSI. If the RSI has come a little below or anywhere close to 30 level 30 and is now reversing and moving up, you know that something special is happening there. You can as well look at your candlesticks to check if there is, because you know about candlesticks, to check if there is any signal that it gives. If you look at the candlestick I have here now, there is a pin bar. One, there is also inside bar breakout. Two, inside bar breakout, don't you see where the red line it broke out? Here now is a complete breakout, telling you that there is going to be a bullish. Here there is a pin bar. Here there is a complete breakout in this line you see here. Don't you see the candlestick in this line? I'm pointing this red line. In this candlestick, I'm pointing this red line. Don't you see the candlestick? There's a complete breakout from this last red candle, this long red candle, telling you that we're expecting a bullish trend. So if you look at all this, you see the market is suggesting a bullish trend. So the next thing you are going to do is then to enter the market. How do I enter the market? How do you enter the market? Yes, having got a signal from the RSI and from the Fibonacci retracement, we now move down to 15 minutes time frame to enter the market. Yes, we now move down to 15 minutes time frame to enter the market. Let's say this is where we are and we want to enter this market. There are rules which I stipulated in the last lecture I sent here. One, if you want to buy, like we want to buy, we must make sure that the conversion line is above the baseline. That the conversion line is above the baseline. One. Two, we must make sure that the market is above the crowd. Two, we must make sure that the market is above the crowd. So in this particular screen you are seeing currently, the conversion line, which is the green line, just crossed the baseline, as you can see. It just crossed the baseline. But the market is not above the crowd. Let's say here, the market is not above the crowd, even though the conversion line has crossed the baseline. So, don't you see the crowd, the orange colored crowd? So we have to wait for the market to move. And let's say the market keeps moving and moving till this point, where the market finally crosses this crowd. Next is we have to check that the last crowd that we are seeing, there are different bullish crowd, you see green, bearish, you see this orange from my own setting. So is the last crowd showing orange color? Is it bullish? Is it rising crowd? If it is not, then we have to wait for this market. So you see, at this particular point in time, here at this particular time or here, don't you see the green crowd telling you that this is already a bullish crowd coming out? And in this bullish crowd, the green line is still above the blue line. The conversion line is still above the baseline, and then the market is above the crowd. Then the final thing is the lagging span, which is this purple line you see here. Is it above the crowd? If it is above the crowd and all these things I have said, that means the condition is met. That means the condition is met. We can enter the market. So from what we have here, you can just from this point where everything was met, you can just take even 100 pips is enough. You can still win it. All right. And as well, we can keep on to see how the market was moving. We can as well watch the market. Don't you see? Let's say I want to enter this market and we are on it here. Let's say I am on a screen here, and okay, let's look at what we have now from the market. Should I enter this market or not? Check the rules in this 15 minutes time frame. Remember, you have a point where you marked your resistance line. After you have determined the trend, there is a support and resistance line you marked using the Fibonacci retracement. So you should always know that as this market is moving, if it's getting close to that resistance line, you should be cautious enough. You shouldn't enter a trade. That is one. So we already know a place that we shouldn't enter this trade, and we already know the place that this market, if it's moving and it gets to, that we should expecting something different. So, and then we have come to 1 hour time frame, and we have seen where the reversal is.